Mitul, how closely are you watching the relationship, the talks between the two sides? How do you think geopolitics will play out?
Yeah, morning, Aslinda. Well, I think clearly, as you've just been talking about, it's very important, and especially after the acrimony that took place in Alaska some time back, it does seem like a warmer beginning this time around, at least. But whether we get to see any resolution of concrete issues, and from a market perspective, that probably is going to be focused on trade and tariffs and subsidies and intellectual property rights, all that sort of stuff. It seems unlikely we're going to really make progress. So while this is good that the two leaders are face to face, at least virtually, it's unlikely that we come out of this with anything concrete to chew on, and especially if anyone's expecting to see any reduction in tariffs on China. I think this is a point of leverage from the US perspective. It's unlikely that's going to change anytime soon.
We've seen inflows into Chinese equities as well as bonds, Mitul, a pretty record pace this year. Do you think that's likely to last, and what does this mean for the renminbi?
Well, hi, Ivan. I mean, I think the reality is that we will continue to see inflows. I think China's index inclusions, both on the bond and equity side, sort of guarantee an inflow of money from a portfolio perspective into China. The question is at what pace. What we saw in terms of bond inflows was some slowdown in recent months. So there has been some concerns, at least from foreign investors, despite the bond index inclusion, that the regulatory measures that have been put in place and other measures in China, such as all the supply issues, the weakening growth outlook, et cetera, perhaps has tarnished some of the attraction certainly of equity markets to some extent. And that's why we may have seen some slowing in inflows. But we still think that China will benefit from relatively strong inflows in the next year. When you add that to a healthy current account position and robust FDI flows, the external position of China remains very, very robust. And that continues to put the RMB under upward pressure and therefore results in some sort of resistance from China's authorities, either via weaker fixings on a daily basis or FX intervention. But we may see more resistance on that front.
And Mitul, it just seems like you have the Fed versus some of these former Fed officials just kind of going against each other when it comes to inflation. I have to wonder, do you think the Fed is behind the curve at the moment and at risk of making a policy mistake, or is the market just overreacting?
We'd go with the latter. We actually think the market's overreacting. Our house view actually is that the Fed is not going to hike rates until late in 2023. So we're well behind in that sense compared to the market pricing, which is pretty much pricing a hike by around middle of next year. So in that sense, we would like to own the front end of the curve because we just think it's too rich in terms of what's been priced in. Now, a lot of that is on the premise that inflation is transitory. And we believe the Fed in the sense that some of these inflation pressures, supply chain issues, and whether it's rentals or auto prices, all of this stuff will start to come off next year. But in the near term, obviously, the pressure's there. Inflation numbers are high. That's keeping markets on edge and rate volatility high as well. And the real question, I guess, is not perhaps right now on when the Fed hikes, but it is on the pace of tapering. We just heard from, as you said, from a few Fed officials highlighting that perhaps the Fed will be more aggressive on the pace of Fed tapering.
What would that do to markets then if they speed up the tapering? Would dollar continue to go up alongside where yields are?
I think it will be bullish for the dollar if that is the case, if they do be more aggressive on tapering. I think for risk assets, you talk about equities, it'd be obviously a little bit more negative, given that that will mean less liquidity, less Fed buying of bonds as well. So you could see some more bond volatility and yields push higher as well. So I think I understand why the Fed is taking a little bit more of a gradual stance in this $15 billion a month of tapering into mid next year. But nonetheless, given where risk assets are, financial conditions are, and where the growth picture is at the moment in the US, there is a strong argument for more aggressive tapering.
This is still a data-dependent Fed, right, Mitul? I mean, and we have U.S. retail sales coming out shortly. How important is this data? How will it dictate where the Fed goes from here?
It is important. Alongside what we saw in terms of the inflation numbers, obviously we know that inflation was at decades highs, and we saw that 6.2% on the CPI, which obviously sent a few shockwaves through the market. Now, with the retail sales, what will be interesting here, it will probably see a strong number. I mean, our forecast is for at least a 1.1% gain. However, a lot of that will be due to price effects. Real sales will actually still be under some pressure. And so, the Fed will need to look through these price effects to determine exactly what's happening with consumer spending. And the picture may not look as rosy as the headlines are going to suggest today.
And what does this mean for EM? It seems like that carry trade seems to be diminishing right now. Where does it look better?
Yeah, I mean, it is diminishing. I think partly it is just because of higher US yields and higher hedging costs, reducing the attraction of a lot of EM carry. That said, we're seeing several central banks hike rates, certainly outside of Asia. We're looking at Mexico, Brazil, for instance, and then, EMEA, you've got the likes of Hungary and Poland. South Africa may even hike this week. So, there is still some opportunities in carry in some of the high-yielding countries. We're relatively bullish on the likes of the BRL compared to forwards. Even in Asia, the rupiah, we still think we're still constructive on the currency. So there is some carry opportunities left. So we don't think carry has died away completely, but it just may look less attractive as yields continue to push higher in the US.